watching exclusive pre-budget market conversation, The Budget of Hope, powered by Investonomics, an initiative by ICICIdirect. Joining me today is an old timer in the markets, Mr. Samir Arora of Helios Capital. Welcome, Samir, and thank you for your time.
Thank you very much.
Budget 22 is being presented at a time when corporate earnings are doing excellent and very strong, right? Rationalization of corporate tax, record low interest rates, implementation of GST, and a large number of steps that government has taken in the last 2 years for the India to sail through these tough times. Do you think budget still can bring relevant things to the table for corporate India to share?
No, there's nothing to ask. It would be unfair for the corporate sector to say, I want this. Why you want it now? You got everything. You got even duty protection.
Yeah.
You got anti-dumping. You got PLI.
Mm-hmm.
Everything is there. Now, some individual corporate, or not corporate, but some individual industry might think that their raw material is 2% higher, or which we don't even know. So those kind of fine-tuning, if somebody wants to do, they can do. But the big picture is to do this and over time show a path for fiscal, a little bit going back to the, you have to one day go back to the pre-COVID fiscal numbers. Right now, some 6.8 or whatever, and used to be a 3.5, 4. So that over 3, 4, 5 years, broadly, that has to go back by, say, maybe 30, 40 basis points each year. But it is unfair for the corporate guys to ask. Of course, they will ask. Now it's too late to ask. They would have already asked.
Yes.
They would have already asked. But I don't think anything meaningful is happening.
And Samir, do you think that the government will continue to push the fiscal pedal to support the fragile economy?
See, right now they will, because they have been allowed by the stock market, by the market. As in when they increase the fiscal deficit target, even I was celebrating it, saying, thank God, they are not keeping a very tight number on that at that time, because the whole world was spending on, the helping because of COVID. So that room was given. Mm-hmm. Now that that room is given, why should we immediately withdraw it? But they'll have to show a path, a glide path that, okay, 6.8 will become, let's say 6.3 or something or whatever. But you must show 0.5, 0.6 reduction, but there's no need to do more. Mm-hmm. But I recently read in a broker report, that they're saying that right now the government has extra money, in the sense, not extra money in money, but money that they could have spent, but the projects are not ready. Right. So this was, I think, from a Credit Suisse report saying that if you look at government balances with the Reserve Bank of India, which effectively show excess money. So some $60 billion is there, 2% of GDP, which is government of India's account with the Reserve Bank. Now, I never used to follow all these things, but I just read it. So you can maybe track it. But basically the point that I understood was that right now there is too much money in the government account, which they can spend because anyway they are supposed to spend. But maybe the projects are not ready, or they've got slowed, they're delayed because of COVID, workers not coming, or some equipment not coming, or something which has. So there is money right now to be spent. So it will be spent. There's no doubt about that.
Mm-hmm. What do you think, Samir, will make the markets happy? Government spending more, not following fiscal discipline, or finance minister getting back on the path of normalization and saying that, okay, I'm going to focus back on fiscal consolidation?
So I think it is going to be happy when the US Federal Reserve says some good things. It's nothing to do this part of being happy. So I was saying it to my office guys that the best thing would be if we say really budget is over, thank God kind of thing, because there is nothing good beyond this. You have to just implement it, the divestment or whatever. But there's nothing new that is, it's unreasonable and putting pressure on the government to do what? Like people suddenly on Twitter start saying, now reduce this tax, that tax. We know that all those things are not happening because, they can't suddenly change their philosophy about these things so fast. Even if later on somebody may change it, but you won't change it in 1 year and flip it around and say, now I will not have capital gains because this has happened, that has happened, or because LIC is coming or something. So I would think there's nothing like that. Basically what the markets, not corporate, what the markets want is that the government has some control on the overall situation. So the control on the situation is that we know that the deficit is high and these are ABC points, because which it will be X% lower, but that X% can't be too big. Otherwise people will have a heart attack. So you basically glide it down, saying that in 5 years we will reduce 2.5% because we'll reduce 40, 50 basis points per year. And we'll have these 1 or 2 windfalls. which we will use, like say LIC or Reliance prepaying 10 years of spectrum fee or something, then all that money I will keep aside. And the world is happy because the tax rate, you don't expect anything lower. Stock market doesn't expect specific incentives. And again, I read that some people want that for private investment, something be done, that their holding period is longer for their taxes. So those fine tuning somebody can do. We don't care because we are public market guys.
Okay.
And they are already making too much money. We are not interested in helping them more right now.
Now, I'm also hearing there are rumors that government may tinker with the long-term capital gain tax
Yeah, I read that, but I think that is a standard this thing which happens pre-budgets, so that when the budget nothing happens, it is considered as a positive budget. That the bad things didn't happen. But there's no sense to randomly increase long-term capital gains tax from 10 to 15%. For what purpose? I mean, they are not saying that currently some wrong things are happening, some speculation is happening, so what is the point and what amount of money you will get? And it's not worth it. And you're going to raise some 10 odd billion in this LIC. You bring the market down 5%, you first lose 500 million there because the valuation of LIC will also fall by 5%. It's no need. And I don't think it's happening. This is done pre-budget, so that budget day, we will all come on TV and say it was a great budget because there was no hike in, but it's not supposed to. I think that would be, so as long as nobody's shooting themselves in the foot, there's nothing wrong about the budget. Should be let it move on kind of thing.
Samir, remember times when there was used to be railway budget and there were a set of stocks that used to move before the budget. I mean,
Correct.
Coal India,
railways, this thing, railway security and accident wale, बड़े सारे होते थे. Yeah.
बहुत सारे होते थे. जो pre-budget, there used to be a rally of
Yeah. So now those we have stopped punting on the budget. Because we used to first do this ITC types in the 90s. Oh, the cigarette price will be high. Then we went to infra. That infra budget. Then we realized, when they announce in the budget, nobody knows which company is going to get a project. They will say, suppose we spend X extra amount on infra. Now suddenly infra stocks go up. But for what purpose? Because by the announcement to the project might be a year. It might go to A company or B company, and you'll get paid in the following year. So all these things we have now controlling ourselves. We are not reacting to any of these announcements. Because previously they would say we are spending in education. Suddenly people will start looking desperately for anything to be connected. There is no need. There's absolutely no need.
The outlays are announced, but you never know what kind of execution is happening on the ground.
And who will be the beneficiary? Randomly people start buying. Yeah. We've also done in our 90s. Everything has been done first before we tell others not to do.
Okay, talking about the government's disinvestment program, FY22 has been terrible. Now, do you see a renewed push for privatization over disinvestment, because disinvestment has not worked?
No, actually, what has not worked is the privatization, because BPCL was to be privatized. So how would you say that privatization model is easier than divestment? Because the divestment sales, some are happening, and now hopefully a big one will happen. Even if it doesn't happen by March, it might just happen maybe 15, 30 days, even if it spills technically into April or something, because now only 2 months are left. So I don't know whether it's happening right now, but it's happening in the very near future. So that way, how would you say that privatization has demonstrated that is easier to do? No, I don't think that is possible. Plus, when you take these big companies, then there is too much controversy and lobbying, because who will buy it, whether that fellow is connected to the government, and or is the competition to some of these things. So that is more difficult to do unless there's smaller privatization. But then nobody really cares if you sell off some hotel here or some rail track there. That doesn't change the numbers. So I think it will have to muddle along like this. And the biggest event can be only if BPCL is privatized, even if it gets 6 months later, because that has been the thrust, and the announcement has made a difference to the market in terms of using that as an example of the fact that government is like privatizing. But I don't think that privatization can take precedence over divestment, because that is a tougher thing to do than divestment.
Okay.
But this year, which are the divestments that have been missed? Because this year the market has been good. So whatever should have been divested, or could have been divested, should have been divested.
There was a long list of 12 to 22 stocks where divestment had to happen, but it did not happen.
But that, okay, then that is their sort of this thing, because the market would have accepted it because the markets were strong and related to whatever is the stock price of that company, 5, 10% lower, they could have sold it.
Mm. But it has been a difficult year as far as the divestment is concerned. Let's talk about cryptos. Government is likely to announce some kind of announcement is expected on the crypto regulations this time. So what's your view on the cryptocurrencies as such?
Well, I think there should be, I mean, these people will hound me, all the trolls on my Twitter account. But I'm totally against crypto. Crypto as in buying these bitcoins or whatever for thinking that you know anything about it in terms of value. Now, if you say I'm going to use Bitcoin to do some unrelated thing, which I don't even know about in a technology sense, not Bitcoin, but the blockchain technology and this and that, who knows? But every other government is effectively outlawing it. Now, some countries may think, including India, that if we don't outlaw it, then we will become the center for innovation for the world. Well, then you will take all the ups and downs of that this thing, because if you see right now, say $1.5 trillion, they say, or 1 trillion or 1.5 trillion is the market value of some of these coins, and if 50% is the fall in the last 6 months, that means $750 billion have been lost. Now, some people will be going under, some people will be angry, some people will be upset. You want to take on this crowd because these stocks, these are not one way.
Yeah.
And if some of the biggest guys say that these things are going to zero, and I don't say it directly, I say they are saying, but the fact that I repeat it means I also agree with that. Otherwise, I will talk about the other half, which says that it's going to 1 million, but I don't talk about them. So that, but I say, I'm not saying it, they are saying, but I choose the examples. So I don't have any faith in it. But if there is some technology kind of thing which they can do, which also is not very clear, but that. So you don't encourage the technology, say that we are investing in startups related to crypto, but not on issuance of coins and on trading of coins and, absolute speculation of the highest order in thousands of coins and nobody knows what they do and what is the purpose.
Mm-hmm. How positive are you, Samir, on the IPO market now? 2021 was brilliant for new age IPOs that we had. The listing was not good, and now these stocks are around.
No, I'm absolutely not positive, and I will not buy nearly any of them. Maybe once in a while I might buy some old economy IPO, because the greed, there has to be a limit to the greed. And also the stupidity of the market to participate in this when they know. You see, it's not hidden. It's not that I only know and they don't know that this IPO came at 100, and 3 months ago that company raised money from some private equity at 70, and 6 months ago it was done at 50 or 20. So first of all, everybody knows because it is in the prospectus that, or in the newspaper. So when everybody knows that during this time the market went up 20%, let's say, I'm just guessing, and this got valued some 4 times, 3 times, and now they are making an offer for sale. Why are we jumping to buy these things? It makes no sense. As if 6 months ago, everybody was an idiot, or the company was such, they did not know anything about their company. And in 6 months, they have suddenly discovered that it should be 4 times. And there are many of these. There is an IPO that happened 8 times. 8 times higher price or something than 1 year ago valuation. How? There has to be some. So the public think that they will buy it and they will get 200 shares and they will sell it on the first day. That sometimes will work. But if you say that you will have to hold it for 3 months, 6 months, we have seen, nobody knows. And just to tell you, Goldman Sachs has this index for loss-making companies. It's only an index of loss-making companies. We don't make a profit. Not loss-making as in a profitable company making a loss, but the kind of, these new. So that index before yesterday and day before was fall, because I saw it on the weekend, was down 39% since November of 2021. And now you can see it in India. Absolutely, the public market guys should go on strike and say that private market guys have to make less when they exit, then we will buy. That is my theory.
Okay, Samir, you have been interacting with foreign investors, many of the foreign investors. You are in US, you're talking to investors there also. Tell me something about what do they feel about the emerging markets, and how is India placed in their,
So I have to give them my story. I don't ask them because they will have less So I say India is not to be taken as part of an emerging market. India is a market. You see, previously what happened, there was an emerging market index or emerging market investors, and they would give money to emerging market funds.
right?
And then those funds would invest some 30% in China, some 12% in India, and then 15% in Korea, and some 13-14% in Taiwan, which are also considered emerging markets, although they otherwise look quite developed, and then rest to Brazil and Russia and all that. So then the Chinese guys went and said, no, no, you can't do like this. Why are you giving money to Brazil and Russia? So you give us separate money
Yeah.
over and above the money that you give to emerging markets.
Mhm.
Now we say India also is getting like that, but lower amount. So the problem in meeting, when I'm at a conference, what happens is that because there are all kinds of investors. So some 50 out of 100 will say we don't look at India. So nothing I can do about them. They say it's too small or whatever. But for the others who have interest, now the positioning that I want for India, because it's not that they're giving me all that money, they will give it to India, is that India, you first give money to China. Okay, give whatever you want to give.
Uh-huh.
Then you give money to India. Then you give money to emerging markets.
Mhm.
Don't give India as part of an emerging market because India deserves a much higher weight than our weight in the index. Because Korea, Taiwan is not really an emerging market. It's not that kind of a big picture vision that it's a long-term story that you will, buy and forget kind of thing. And the Latin American countries are quite, at least I say, why are you giving money to those guys? And I've got some data to show that people are doing it. That India is getting money, or when money is being withdrawn, less is withdrawn from India than it is from Korea, Taiwan, and all these. So the positioning has to be, please take us one level above emerging market
Mhm.
by saying that separately I want to put 15-20% in India instead of 12%.
Right.
And give it, and I say give it to the dedicated guys because they know that it better than the emerging market guy who will have 10 countries to invest in. And he will go in and out of the country, or even if he has two people there, but still he has to handle 10 governments and 10 political systems and 10 currencies and 10 central banks. So please give us a lead. Thank you very much. That is our pitch. And some of them do.
One last question, Samir. Talking about inflation and the rising interest rates, do you see that as a threat to the GDP growth of India?
No, not GDP growth right now, because inflation in India, by the way, is not that out of line as it is in US. So US, the Indian band is what, 4 plus minus 2. So we are within that. But the US is 2, and now it is at like 5 or 6 or 7 actually. So Indian right now inflation issue is not that big an issue. Plus there will be some natural reduction in inflation because some of it has to relate to workers not being back in their job, or the supply chain not working, which is because of workers not being in their job, or some semiconductors. Over the next 6, 9, 12 months, some of these things, I assume, because containers, they say, are not available now. It can't be forever a problem. It is a problem because when you are exporting, your exports are not working, but you need the imports because your exports were something else where that. So it's all connected. But something, one thing will solve, then 5 things will solve. For example, if one country has to send out containers,
Mhm.
which means they have to export.
Right.
So they say there are no containers because maybe the imports were not coming. Because otherwise the containers would have come in like they used to do all their life. So that means imports are not working because something in that country is stuck, which was normally being imported. Right now that factory is closed or something has happened, or the auto. So that plus minus a few months, 6 months, 9 months will get resolved when these kind of things will solve. So maybe even in the US, some 1 or 2, that's why they used to call it transitory inflation previously. But now they are saying if we keep calling it transitory, and what if it doesn't? But some part of it must be transitory. Some
Yeah.
part.
Supply
The only
constraint.
assumption is whether it's a large part or a small part. So India does not have that problem. So I don't think that is an issue here. That is not an issue.
Thank you, Samir, for your views.
Okay, thank you very much. Thank you. Thanks a lot.
Thank you very much. It was a pleasure
Thanks a
speaking
lot.
with you.
Thank you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.